What's up, Amazon lovers? Happy Labor Day, Merry Christmas. I'm going to try and make this video as quick as possible, jam-packed with information. If that's something you can get behind, please smash that like button, drop me a subscribe below. Today we're talking about Amazon stock and why I think it is the biggest no-brainer stock to buy. It is doing a little bit of everything. I think it's an AI company that yet they're getting no recognition for that today. We're going to talk about all this and more. So since it's almost Christmas and all, September, Christmas is practically tomorrow. I go on Amazon to see, and what do you know? I can buy a Christmas tree on Amazon. Is there anything you can't buy on Amazon? So I'm looking at a few Christmas trees here, and as much as it hurts my soul, I'm looking at this $360 tree. It looks super nice, and even though that could buy me 3 shares of Amazon, might have to get it. So I decided to go and look at the reviews. I wanted a tree that is easy to assemble. And what do you know? When I go to look at the reviews here, I don't even have to read the customer reviews. You know why? Because the top text is an AI-generated text summarizing customer reviews. Customers find the artificial tree easy to assemble. They mention it's simple, realistic, and pre-lit. Customers are all impressed with the ease of taking apart and packing away the tree. Beautiful. I don't even need to sift through all of the customer reviews anymore. This is the state of AI. Now, I've talked about Amazon a couple times on the channel here. I've written articles about it on Substack where I go into why it is an AI play, and I'll touch on that briefly in a minute, but don't want to dwell too much on it as I have talked about it already. But let's look at some other exciting things here. So there's a few things that I want to emphasize here with Amazon. If we look at their revenue over the trailing 12 months, it just continues to grow steadily every quarter, despite difficulties, headwinds that so many companies are facing. Look at Amazon's revenue, okay? 1 year ago, the quarter coming up here that they're about to report, they brought in $500 billion. Q1 or Q4 of last year, they brought in $514 billion. Q1 of this year, $524 billion. The most recent quarter, $538 billion. $538 billion of trailing 12 months revenue, right? So not just for those quarters, for the trailing 12 months. That is more money than Apple brings in. And Apple's trailing 12-month revenue has been declining for the last 3 quarters. Amazon's revenue continues increasing. Now, obviously Apple has higher margins, but I think Amazon's margins are going to get there and they actually have a stronger moat. When we look here at their EPS, there is a pattern, right? 2 patterns I want to focus on. First of all, their Christmas quarter, like many companies, tends to be their best quarter. So if we just go back to 2020 here, as you can see, their EPS quarterly, the best quarter is always the Christmas quarter, right? So, the first quarter of the year, they only brought in 25 cents of EPS in 2020. Next quarter, 52 cents. Next quarter, 62. The quarter with the year end, with Christmas, holiday season, 71 cents, okay? Let's look at the next year. First quarter, 79 cents, 76, 31, and the final quarter of 2021, $1.38 of EPS. Now, 2022, there was so many headwinds facing the company. It was still much better than Q1 and Q2, as you can see. They lost money the first 2 quarters, EPS. Fourth quarter, they brought in 3 cents of EPS, so just below the third quarter. But again, this was an outlier of a year, I think. But I think here in 2023, as we're seeing, they're kind of back to the good times. EPS is looking really good. 31 cents the first quarter, 65 cents the second quarter. Things are starting to look up. Amazon is also coming out of this massive reinvestment cycle, which the company goes through. They had a lot of operating expenses and things. The company has done this multiple times. The cycle continues to repeat. They go through massive, reinvestment phases, and a lot of that coming out of the pandemic. They kind of overbuilt, overhired, and they kind of had to, reoptimize and condense things to meet, a more realistic and sustainable demand as we came out of the pandemic. But again, if we look at that revenue, it obviously continued to grow, right? So it is slow and steady growth. I mean, I say slow, double-digit growth. They're growing. We'll get to their segment breakdown, but they are growing, double-digit percentage points in the business segments that I think really matter. We'll touch on that in a second here. The other point I really wanted to hit on is, so we hit on, they've got a lot of short-term tailwinds, I think, coming here. Again, we're coming out of this reinvestment cycle. I think Amazon's going to do really good in the near future. Obviously, revenue and EPS, keep going up. And that Christmas time quarter tends to be a really good quarter. And third quarter will probably be strong as well. Before I get to my last Substack article where I'm going to show you guys why, the relevant segments are growing and the other things that I find really attractive about Amazon, I just want to look at this chart of the mobile internet cycle, which I think is very interesting, to say the least, because as we can see here, this is a chart of the mobile internet cycle, okay? And what you can see is, while history doesn't repeat, it does often rhyme. And this is basically how the mobile internet cycle was monetized. So basically what you saw starting in 2010, 2011, the companies that captured the lion's share, that performed the best, were the semiconductor companies, which back then was Qualcomm, it was ARM. Again, this is when things like the iPhone, smartphones were really starting to take off, mobile internet. What do we see happening today in the AI hype cycle we're kind of in? Semiconductors, NVIDIA is crushing it. They are doing amazing. Okay, what was the next phase of the mobile internet cycle? You had infrastructure and device companies. So Apple, Samsung, companies making smartphones like Apple, they did very well. And then so that was kind of like the second layer after the semiconductors. The third layer was software and services. That's where Google and Amazon really started to thrive. So I think Amazon really is going to thrive again in the same way. Obviously, they're going to benefit from AI. I think they're doing a lot with AI. They are even designing their own AI chips. More on that in a second. They've been working on that for years. They've got machine learning and inference chips that they've been working on. So I really think that this chart is an interesting one. It kind of gives us some insights into maybe how the current AI cycle we find ourselves in may play out. Again, obviously NVIDIA is a big winner right now. Who's going to be next? What do you guys think? Let me know in the comments below when we get to infrastructure and devices, software and services. My other big pick would be Tesla. It's funny, Tesla obviously a very, very polarizing stock. It may be the most polarizing stock of all time. I mean, I don't know another stock that had such staunch camps of bulls and bears that are so convinced they can determine one data point, they can see it one way or the total opposite. Like recently with these Tesla price cuts, bulls think it's bullish, bears think the price cuts are bearish. I think, as much as I love Tesla, I think Amazon, we can all agree on, is just more of a no-brainer winner, right? This is a company that I'm constantly using. I mean, you can buy anything on Amazon, and that's the other thing I like about it a lot with the core retail business. If things happen, things go out of style, but you know what's not going out of style? Where you're going to be buying the things, and that's Amazon. But that is really just the tip of the iceberg company. So let's take a look at why that is. Pull up my Substack article here and start off with a little homemade meme. I don't always buy things, but when I do, I buy them on Amazon, and it's true. And I don't know. Let me know if you guys are like that too, if it's similar for you. I buy a lot of stuff on Amazon. It's extremely convenient. I'm in the subscribe and save. I mean, they're killing it. Amazon is very convenient, right? It's all about conveniency. I think that, even more than AI, the trend of conveniency is a big winner, right? Not, people are kind of getting lazier. I mean, why would I go to the store if I could get something delivered to my doorstep? Amazon Prime, it's worth paying for. It's free. It saves me time. A lot of the time, I do feel like I am actually saving money on a lot of these products. Delivered to my door same day or next day. I mean, just incredible. No one can compete in that regard of speed and conveniency. And in their last earnings call here, I'm not going to go through the whole article, just want to touch on a couple key points here. They kind of talked about how the delivery speed is actually very important, because a lot of the data they have is showing that when customers get faster delivery, they're purchasing more often, and like significantly more often. So I think that's a big win for the company. Again, as I kind of mentioned, I think they are an AI company. They're not really getting credit for it today. Andy Jassy has said multiple times in interviews and on these calls that he thinks we're kind of in the hype cycle, the beginning stages of AI, and there's really three key layers, all of which Amazon and AWS are kind of investing heavily into. I think Amazon is going to, benefit tremendously from this whole AI craze that we find ourselves in. Now, what really excites me here, if we look at their breakdown, their sales, where they're coming from, obviously the online stores, the core retail business makes up a big chunk, but I think what's more exciting is these other segments are starting to make up a bigger chunk of the pie, and they're growing quickly. For example, basically every services segment. We've got third-party seller services, subscription services, advertising services, obviously AWS, Amazon Web Services. So if we just take a look at them real quick, one at a time. Third-party seller services growing 18% in the prior quarter. And again, every quarter here you see double-digit percentage growth. Same with subscription services, 14% growth in the previous quarter. Advertising services, I think this is a huge one that is being slept on. They're going to eat into, the markets of the Googles and Metas of the world, that segment is growing 22%, and then AWS 12%. I think these segments are really not getting enough credit. And again, these are bringing in significant chunks of money. I mean, AWS over the past 4 quarters is, approaching $100 billion run rate of revenue. Advertising is approaching, $40 or $50 billion of revenue. Subscription services, obviously big. Third-party seller services, the biggest of all of those, is around $120 billion of revenue the last 4 quarters. These are all growing. These are all higher margin businesses, or will become higher margin businesses. So I think there's a lot to be excited about with Amazon, and that's why it's kind of become my second favorite stock, I would say, after Tesla. What do you guys think of Amazon? And then just a couple more things I wanted to get to. So again, going back to Amazon's increasing efficiency, and I think the margins that inevitably are coming, when you combine things like their investment in Rivian, they've got all these electric delivery vans, right? That's just going to continue to grow, and it's going to save them a ton of money because their biggest expense is the diesel fuel costs, which in 2022 were sky high, and prior years with inflation and everything. But now it's kind of starting to normalize. But these electric vans are going to become more and more common part of their fleet. That's saving them a ton of money. We look at a chart like this, the number of Amazon employees and robots from ARK Invest. Just look at the rapid increases we're seeing here. I mean, we don't even have the 2023 numbers, but from 2020 to 2022, the number of robots that they are utilizing basically doubled. And it's growing. Like, this is going to become a bigger and bigger part of the pie here. And their number of employees, I think, is probably going to decrease from these 2022 numbers. I think the robot number is going to start to catch up to that, right? And obviously, this is all bringing higher levels of efficiency. So let me know what you guys think of Amazon in the comments below. If you enjoyed this video, if you found some value today, I'd greatly appreciate liking, subscribing, share with a friend, and let me know what you think in the comments below. This is Vinny from the Investment Club. I'll see you guys next time. And if you like to read, check out my Substack. I'll link to this article in the description below as well. See you guys on the next one.
Thank you.